What's up, guys? It's your girl April, your favorite mortgage lender, and I am back with another one. You guys, that's my rendition of DJ Khaled, so get into it. But listen, Justin, my 11-year-old, he's like, Mommy, you cannot insert a clip into a professional YouTube video when you're talking about serious stuff like mortgages. And I'm like, excuse me, but hey, but you know what? I gotta heed his advice. These YouTube babies. So, your mortgage rate. Okay, the infamous rate shoppers. This one's for you. Or maybe this one is not for you because it's maybe politically incorrect, but I don't like rate shoppers. I'm just going to put it out there. As you know, mortgage rates are higher. You know, I was in Panera the other day and they're like, someone said, oh my gosh, I cannot believe how high rates are. It is just unbelievable, unreal what's going on right now. You guys, you do realize rates were not low because the economy was booming. Rates were low because of COVID. I cannot stress that enough. Those rates were historically low. Not historically low as in, for the last decade, the last 20 years. No, like ever. If you happen to get in at that time, during COVID, you know, I mean, we're still in COVID, but you guys know what I mean. At the beginning, 2020, 2021, where rates were so historically low. If you got in at that time, great. Good for you. Now, but what I need, some of you people who did get in, I need you to don't gas up your cousin. Don't gas up your friend. Don't gas up your coworker. Oh, girl. Ooh, what you mean you paying a 5% rate? No, the rates during COVID is not a proper benchmark. So you guys, I know I feel like I'm beating a dead horse, but I cannot stress this enough. And now that we are back into reality, you know, rates are where they really should be, you know, 5s, you know. Now, I don't have anything in the 6s unless you're doing no income docs, but you're probably going to get a 5. You may get a high 4, but that is as of today. I don't want the licensing police to come get me now. That's number one. And number two, your rate's just your rate until you lock it. You see how I just did that? So your rate, the rate shoppers especially, oh, what kind of rate you have? Okay, well, I mean, I can give you a rate based off of a top level scenario. But hell, as you guys saw the last couple months, oh, you could wake up the next day and a war can happen. You know, a whole war can happen. And literally when that happened in Ukraine, rates changed like a light switch. Like a light switch. I do recommend that, number one, you speak with 2 to 3 lenders. So you do want to speak 2 to 3 lenders because you want to find out a couple of things. You want to find out their rate. As much as I'm so against rate shoppers, but I'm going to give you the whole package. I'm not against you getting the whole package. I am against you just getting the rate. So I do think that you should go to 2 or 3 lenders and get the rate. You should get an idea of fees, and you should get their communication styles. You should get some type of idea of what you would qualify for, and of course, you should get the most important piece is what you feel in your gut. It's such a huge transaction. You should use the same approach as if you are meeting with your attorney and because you got caught up in a jam. Or you talk to him on the phone. You would have every single duck in the road trying to weed out, trying to see who's the best for the job. That's how I want you to approach this looking for your lender. Don't be, what's that, wet behind the ears or green or milk on your mouth, something like that. Don't be so gullible and just say, hey, what's your rate? Shopping for those 2 to 3 lenders, you will not get dinged on your credit report. That whole I don't want my credit pulled has our people in a chokehold. Have them in a chokehold. My biggest beef with this is I don't know where it came from. The fact that people say, no, do not pull my credit because it's going to fall, my score. So, ma'am, how exactly you about to get this house then? You go buy a new Beamer, you got your credit pulled. No one ever throws a fit when they're at the BMW or Range Rover or Mercedes. I've never heard of anyone freaking out or telling the finance person no. I've never seen it. I've never seen anyone challenge a finance person at the dealership. You get that new Amex, you got your credit pulled. You join Navy Federal, getting some credit lines for your business or whatever, you got your credit pulled. Okay, but that's a good one. If you're getting credit lines for your business, that's a good one. Because you're investing in your business. It's not a depreciating asset like a car. But I'm not going to digress. But when it comes to buying a whole house, something that you can pass on to your kids or your family or to build your portfolio, now you got 21 questions. What the hell? The credit algorithm does not ding you on getting your credit pulled unless you are someone with jacked up credit. Now, if you are someone with jacked up credit, high utilization, balance, your credit card is almost maxed out, you have collections, you probably got a repo and whatever else on there, and now you're applying for credit card, the credit algorithm is like, what is this person doing? The credit algorithm is like, okay, you know what? I'm dinging you 7 points. That's just an example. I'm dinging you 7 points because you just don't get it. You got the game all messed up. That's what the credit report algorithm is doing. Now, someone with good credit, excellent credit, you think you're going to get dinged because credit is supposed to be used in a good way. Why would the credit report punish you for you're using it the correct way? Just logically, it doesn't make sense. You know? So yeah, if you have jacked up credit, you're probably gonna get dinged 9 times out of 10. And you can reference this on Equifax.com and MyFICO. So I'm not just pulling this out the clear sky. This is information on the internet, as well as information on the internet for when you are shopping for a mortgage. You have a couple of weeks where you absolutely don't get dinged. And that's even for people with jacked up credit. The whole reason is because the government actually encourages you to compare lenders to basically make sure you don't get hemmed up. They don't want you to get in a jam. They don't want you to get in a situation where you're being taken advantage of. You apply it to just one person, and this person basically ripped everything off, including the shirt on your back. So the government's like, hey, you know what? We give you a couple weeks to shop for your mortgage, and we will not ding you at all. So definitely you can apply it to as many mortgage lenders as you want. But now that you've gotten pre-approved, now we can talk about, let's say now you're out shopping for your home. And actually this week, rates are lower right now than last week because I just locked some loans that I actually had higher rates. And when I went to go lock their loans, I'm like, oh, I just saved 0.5. If you have somebody a little goofy and they're like, hey, here's your pre-approval, $400,000. And you're like, okay. And they don't give you anything else in that with the pre-approval letter. And so you say, hey, what's my rate? And they say 5.25. Okay, what does that mean? What does that mean? Your affordability is your monthly payment because that's what you're going to feel day in and day out. Once you go under contract is when we will lock your rate. So that is, I don't want to say it's all smoke and mirrors until you lock your rate, but it kind of is, because as you guys know, your rate is based on your credit score and property and other things, other factors. Now that we've locked your rate, now we will go through the rest of the process to get you closed. So to wrap this up, the biggest things that I want you guys to do is to, when you are getting pre-approved, talk to 2 or 3 lenders, ask them about their rate and their fees, and get it in your gut. You can feel if somebody's full of crap. You can. Do not be afraid of getting your credit pulled those 2 to 3 times. You will not get dinged on your credit report shopping for a mortgage. Do not let that get in the way. And then lastly, your rate is just your rate until you lock it. You will get your rate locked once you go under contract, and that is okay. You guys keep those credit reports tight. So hit that subscribe and like button. It's been such a pleasure doing another video. I know you guys on the other end are rocking with me, so I appreciate you guys. Share it, save it, send it to your friend with a pigeon with a note. I don't know. And until next time, I'll talk to you guys later.